Brad Williams, Frugal Finance, Negotiating Credit Card Debt, a guide to regaining control of your finances. Credit cards can quickly become overwhelming, especially in times of financial hardship. Rising interest rates, inflation, and unexpected emergencies often leave individuals struggling to make payments. While bankruptcy is one option, many people find relief through credit card debt negotiation. This process involves working directly with credit card companies to reduce the amount owed, avoid collections, and regain financial stability. What is credit card debt negotiation? Credit card debt negotiation allows borrowers to settle their debt for less than what is owed. This strategy works because credit card companies prefer to recover some of their money rather than risk the borrower defaulting entirely. By negotiating directly with the creditor, individuals can reduce the amount owed or agree to more favorable payment terms, such as lower interest rates or extended payment plans. The timing of debt negotiation. Timing plays a crucial role in successful negotiating credit card debt. If you miss payments, the first 30 to 60 days are typically considered a grace period. During this time, creditors may offer help in catching up on missed payments without penalizing the borrower too harshly. However, as the debt becomes more delinquent, creditors will begin to apply late fees, increase interest rates, and escalate collection efforts. By 90 days of missed payments, creditors may be more inclined to settle the debt rather than risk it going to collections. However, once the debt reaches 120 to 180 days of non-payment, creditors often charge off the debt and sell it to a collection agency, which makes negotiations with the original creditor difficult. At this stage, the debt will be pursued more aggressively, possibly leading to legal action and further damage to your credit score. DIY versus debt settlement companies. When facing credit card debt, many people are tempted to use debt settlement companies that promise to handle negotiations on their behalf. While these companies may seem like a quick solution, they often come with high fees, sometimes up to 25% of the total debt, and questionable practices. According to the Federal Trade Commission, fewer than 10% of consumers successfully complete debt settlement programs and may end up worse off than before. For those comfortable handling negotiations themselves, directly contacting creditors can be a more effective and cost-efficient way to resolve debt. By negotiating directly, borrowers avoid the high fees associated with third-party services and have more control over the process. Steps to negotiating credit card debt: stop making payments. Although this may seem risky, missing payments can signal to creditors that you're in financial distress. However, this should only be done after thoroughly assessing your situation and ensuring you're prepared for negotiations. Assess your finances before reaching out to creditors. Create a budget that outlines your income, expenses, and total debt. This will give you a clear understanding of what you can afford to offer in a lump sum payment or as part of a payment plan. Know your rights. Familiarize yourself with the Fair Debt Collection Practice Act, which sets limits on how and when creditors can contact you. Understanding the statute of limitations on your debt and potential tax implications of forgiven debt is also essential. Contact the creditor. When you're ready to negotiate, contact your creditor and explain your financial situation. Offer a lower amount than you can afford, leaving room for negotiation. Most companies are willing to settle for 30 to 50% of the debt, but be prepared for multiple rounds of negotiation. Get everything in writing. If you reach a settlement, make sure to get the agreement in writing, including the amount you've agreed to pay, payment terms, and confirmation that the debt will be marked as settled or paid in full. Impact on credit score and debt resolution. Settling credit card debt for less than what is owed will impact your credit score, but the effect is usually temporary. Over the next 6 to 24 months, your credit score can recover, especially if you continue to pay down other debts and avoid accumulating new ones. The settled debt will remain on your credit report for up to 7 years, but the damage will decrease over time as you demonstrate responsible financial behavior. Conclusion: negotiating credit card debt can be a visible solution for those settling with higher balances. While it requires careful planning and persistence, settling your debt for less than the full amount can significantly reduce financial stress and help you avoid bankruptcy. By negotiating directly with creditors, individuals can minimize fees, regain control of their finances, and work towards a more stable financial future. For those of you that have gone down this route, provide some hints, some clues, some suggestions. If you have any questions or concerns about negotiating credit card debt, comment. Brad Williams, Frugal Finance. Thanks for watching. Hope that helps. See you soon.